and welcome to Kitco Mining with me, Paul Harris. Today, we're talking about junior gold space and what the impact of the gold price on that is. And to join me to do so, I'm joined by one of our sponsors, Luke Alexander, President and CEO of Newcore Gold. Luke, welcome back to Kitco.
Yeah, hi, Paul. Thanks a lot for having me.
It's a great moment of time to have you on, Luke. You've been doing a lot of great things at NG in Ghana, and the timing couldn't be better. Gold's over $3,000 per ounce. It's been over $3,100 per ounce in the last few days. Confidence seems to be riding high in the sector. Let's start there. Is that true in the junior explorer space too? Are junior gold explorers feeling confident right now?
I think it's really on a case-by-case basis. I mean, for us at Newcore, we're extremely confident. We've got a very strong balance sheet at the moment. We were able to raise $15 million in February of this year. We've got total cash equivalent of about $31 million. So we are going to be extremely active in 2025, be able to execute on our business plan, be able to get lots of results out to the market. But, coming off of PDAC and coming back from the Indaba conference in Cape Town in February, I wouldn't say that that's unanimous, the sentiment for junior companies out there. A number of companies are still really struggling to be able to raise capital. And I think what we're seeing in the market right now is we're seeing investors ultimately choosing between, companies that they see as having projects that will create significant amount of shareholder value. And they're really being discerning relative to companies that have been around for quite a while who may not have the projects that they ultimately think will be able to create the returns that they're looking for. So for us at Newcore, we're very fortunate to have a great project in Ghana, a tier 1 jurisdiction. It's district scale exploration that's fundamentally underpinned by very robust economics that we put out in a PEA that we're ultimately going to expand to a PFS, and then very well backed by deep-pocketed, long-term, institutional-focused investors who recognize the tremendous upside that there is within the company. So today we're 55% institutionally owned, and then management and board, importantly, are very well aligned with shareholders through our 15% ownership in the business. So Newcore, we feel very confident where we are in the market, but I wouldn't say that's unanimous for the juniors out there. A number of them are still really struggling to raise capital and move their projects forward.
Well, let me twist that question a little bit for you then. You raised 15 million in February. How easy or difficult was that compared to previous times you've had to raise?
Yeah, so for us, it was, I'd say, easier to raise capital this time. That being said, anytime you go out to raise capital, I would argue that it's years of investment that goes into that point of raising capital. A number of the funds that we had come in as lead investors, for instance, on that $15 million raise, those are groups that we have been talking to for years, that have been following the project, have been seeing all of the work that we've been doing, that have also, gained confidence in the company, in the management team, in the asset that we're ultimately going to deliver on what we say we're going to deliver, because we had been communicating that over a number of years. In terms of the financing specifically, we were at the Indaba conference in Cape Town early February. We left that conference with a number of groups who had expressed significant interest in Newcore. We then stopped in New York. We met with a few very large institutional investors who've been following Newcore for a number of years. And on the back of that, we launched a $12 million financing. We then quickly increased that to $15 million. We were well oversubscribed. We didn't want to cut investors back significantly, so we raised the overall size of the financing to $15 million. And, that was a very well-supported financing, and ultimately allowed us to then expand our drill program from an initial 10,000 meters to 35,000 meters.
Okay, I was going to ask you this a little bit later on, but this seems a good moment in time. Investors take many cues for signals. Great drill results could be part of those. But one of them obviously is the management team and the board. And it's very noticeable from your corporate presentation. You have a large part of the brain trust that was or is behind Calibri Mining in your board. You also have George Salamis, who's been the quarterback at Integra Resources for a number of years, and he's overseen a couple of acquisitions that now see Integra as a US gold producer. How did you put together? How did you put the board together? What does that do for you as the CEO?
Yeah, so Doug Forrester, Blaine Johnson, they're co-founders of Newcore. I got to know them when they were running Newmarket Gold, which a number of your viewers will remember as a huge success story. I was in London at the time, working on the investment banking side of the business. Worked really closely with them to raise a lot of money out of Europe to ultimately take the Fosterville asset. Well, it was in production and ultimately through that period, and ultimately selling Newmarket Gold to Kirkland Lake. So that started off as a $10 million company, vended in the Fosterville asset, sold to Kirkland Lake for about $1.4 billion. On the back of that, Doug and Blaine were also co-founders of Calibre Mining, which you'll now know is being acquired or merging with Equinox Gold. And I worked really closely with them on Calibre as well. We raised $100 million for that company to buy B2 Gold's producing assets in Nicaragua. And then, basically grew that production. The team at Calibre grew that production, then bought the Marathon, the Valentine project, and then ultimately are now merging with Equinox. So it's a group that I've worked with for a number of years. And, as co-founders of Newcore, obviously a number of the individuals on the board are on the board of both Calibre and Newcore Gold, as you mentioned, including Doug Forrester, Blaine Johnson, and Ryan King, who were all involved in Newmarket as well as Calibre, and have been involved in Newcore for a number of years as well. So it's a great team that's backing the company.
And Greg Smith as well. There's a wonderful photograph in your corporate deck in the moment of you with Greg Smith looking at Drillcore.
Yeah, Greg is a key member of our team. Greg was actually the CEO of Calibre Mining, and when the B2 Gold assets got vended in and it became a producing company, Greg came and joined the relaunch of Pinecrest at the time, which is now Newcore Gold. So he and I joined at the same time, along with Mal Carvasca, who's one of our key executive team members as well, and that we relaunched the company at that stage. Greg Smith's got, as you would know, over 30 plus years of exploration experience. He's worked in these greenstone hosted deposits around the world. So obviously that wealth of knowledge is a critical element for us driving this project forward, and a big contribution to the success that we've had.
I think I first met Greg about 15 years ago on a site visit to Nicaragua. Okay, yeah. Let's get more up to date. Your share price has been on a bit of a tear since late February. It's up about 50%, which seemed to coincide with your announcement of increasing your drilling program to that 35,000 meters you mentioned a moment ago. It ripped about a year ago also by about 50% when you put out the PEA for a 122,000 ounce per year operation for 9 years. It seems that the market is really starting to reward drilling results and aggressive programs. You put out some drilling results today from soaring, 68 meters, grading 0.73 grams per ton gold. So, Luke, what is the plan for this 35,000 meters? How will that build on last year's PEA?
Yeah, so on the back of the financing, we increased our drill program from 10,000 meters to 35,000 meters. As we've highlighted, a large portion of that drilling is focused on resource conversion, so converting ounces from the inferred to the indicated category. So that's one of the key components to take us from a PEA to a PFS. So we're well on our way and actually ahead of schedule from that perspective. And then with the additional 25,000 meters of drilling that we announced as part of that expansion, we will be focused on a lot of pure resource type expansion drilling, going after some of the greenfield targets that we've got on our project, as well as some of the deeper targets that we've identified. When you look at our project as a whole, we've identified over 25 targets across the project, of which we've only drilled on 9 of them to date. All of our deposits do remain open along strike, so systematically stepping out and continuing to expand the near surface resource is something that we're focused on, as well as we've identified a number of parallel structures that we're drilling on. The CUM extension would be a great example of that, and we've been putting results out from that over the last few months. And then we've got previously drill tested areas. These are areas where historically we've drilled, call it 2,000 to 5,000 meters. We've made discoveries, but we haven't built up the mineralized footprint to a size that warrants wrapping a resource around it. So going back to those types of areas is something that we'll focus on. And then, the other opportunity that we're extremely excited about is the opportunity at depth. So if you look at the drilling that we've done to date and the average vertical depth that constrains our pits, it's down to an average of 75 meters. When you look at these greenstone hosted deposits along the Sefwi-Bibiani belt, including Chirano at 5.5 million ounce endowment, Bibiani at 6.5 million ounce, and Newmont's Ahafo at 20 million ounces en route to 25 million ounces, those deposits will be down anywhere to 800 meters to a kilometer below surface. So obviously at 75 meter average vertical depth for our pits today, we see a real opportunity to continue to chase high grade structures, and we have started to identify a number of those high grade structures across our project, and that's something that we want to go back and do additional drilling. So systematic along strike, going back to additional or previously drill tested areas, and then that opportunity at depth. So when we talk about district scale, it's a combination of all of those things.
Got a couple of follow-up questions there for you, Luke. The first one, hopefully nice, short and easy. PFS, what's your view on the timeline for that?
So our goal is to commission it in the second half of this year and have it published in the first half of 2026.
Okay, great stuff. Now, with all this expansion and exploration drilling you're undertaking now as part of this expanded 35,000 meter program, how big do you think Enchi can get?
I mean, again, if you look at other, projects and deposits along the Sefwi-Bibiani belt at 5.5, 6.5, 20 million ounce plus, I mean, we've again just scratched the surface, and we see huge exploration opportunity across the entire project. So, you're talking about a district that has, 5 million ounce plus deposits strewn all the way up it. So, that's the kind of scale that we could see our project getting to.
What's the long-term corporate vision for the company? You've got a finance background. Some of the board members we've spoken about, they've got a history of successfully developing and then selling on companies to bigger companies. What's the plan here, the ultimate plan?
So we, as 15% shareholders of the business, we're ultimately aligned with shareholders to maximize value and create returns for shareholders. So with that in mind, we keep all of our options open. So we've got a project that for us at Newcore is a very buildable project. We're looking at $106 million of CapEx. If you look at the PEA numbers, $106 million of CapEx at a $2,350 gold price, that generates an after-tax NPV of $632 million, after-tax IRR of 92% and a 1.1 year payback. So that's an extremely attractive, robust project. At those $2,350 gold prices, you're looking at $855 million of after-tax cash flow. So that's a project that our team can build. And if you look at the board, that's something we can execute on. We're not beholden to M&A and having to have someone come in and buy us. That being said, as we all know, typically as you move these projects and de-risk them along the path from PEA to PFS to FS, often you'll have someone come along and offer to buy the company or buy the project. So we keep those avenues open, but we're not beholden to that. And that's one of the things that I really like about Newcore is we've got a project we can execute on that will also be very attractive as we de-risk it from an M&A perspective. So lots of optionality for shareholders from that perspective. And then layered on top, as we've already talked about, is district scale exploration upside.
So with the PFS, will that reflect the PEA in terms of, the 122,000 ounces a year for 9 years? With the additional ore, with the additional exploration you're doing, will you perhaps look to try and get that up to 150, 200,000 ounces a year, levels where it certainly will become much more interesting to a broader audience of bigger companies?
When you look at the economics that came out of the PEA, I mean, they're truly spectacular economics. I mean, I just ran through them in terms of $630 million after-tax NPV, 92% IRR. I mean, I would challenge anyone watching this to go out and try to find a project that's got economics as good as that. So our view is that if we can replicate or closely replicate that within the PFS, that will be a significant result for shareholders and will ultimately lead to a re-rate in the company as the market properly prices in a PFS stage project with those types of economics. Obviously, we'll look, to optimize around the edges, and we'll look at the opportunity to potentially grow production, those types of things. But really our goal is to de-risk the project we outlined within the PEA to a PFS stage, because we see a huge amount of value being created through that process.
Now, Enchi is in Ghana, which of course is in West Africa. And I think it'd be fair to say there's been quite a bit of excitement in some corners of West Africa in recent months. How is the dust settling in West Africa? Do you see people able to differentiate between one country and another when they're looking at things and potentially making investment decisions?
Yeah, I mean, I think it's important, any jurisdiction in the world for, investors to do their homework and properly analyze the risks within those jurisdictions. We refer to Ghana as a tier 1 jurisdiction to be operating in. It is Africa's largest gold producer. It's the 6th largest gold producer globally, just behind Canada and the US. It's very important for the economy. It's important for jobs. It's important for taxes. You've got a government that's very well aligned and wants to see projects being built. What we ultimately say, though, is, again, don't listen to me, single asset bias CEO, but look at what the major mining companies are doing. You've got Newmont, who's investing an additional $1 billion into their Ahafo project, which sits along the Sefwi Bibiani belt from us. That will take them to over 1 million ounces per year and make it their 2nd largest producing asset globally. You then have AngloGold, Gold Fields, who are another 2 of the top 10 gold producers globally. And then we have Zijin, who's just come into the country and bought Newmont's non-core asset, the Achim asset, for $1 billion. So that's 4 of the top 10 largest gold producers with significant operations in Ghana. So it truly is a tier 1 jurisdiction. We then have Shandong up in the north, who's just brought the Namdini project into production. For your viewers who remember Cardinal Resources, Shandong was in a full-on bidding war with Nord Gold 3-4 years ago for that project. They won out. Fast forward 3 years later, and they're now producing 350,000 ounces of gold per year. So I think that also speaks to the ability to get projects built and into production in Ghana, which then reiterates the point about it being a tier 1 jurisdiction. So at Newcore, we're extremely fortunate to have amassed such a large land package when we did, and be in a position now to take it from PEA to PFS and ultimately look to get it into production.
Well, you're certainly in good company there in Guyana. A lot of good catalysts to come this year, and we will be catching up with you a little bit later on, as you're the sponsor of one of our events later in the fall. Luke, Alexander, thank you very much for joining us today.
Yeah, thanks a lot, Paul. Great to see you again.
And of course, if you like what you see, don't forget to hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.